Hello there. Today is Tuesday, April 15th, and welcome to this week's edition of the Kluge Wealth Advisory Group Client Connect video. In this week's video, we're going to touch on a number of things, including a summary of current situation. We're going to talk about the opportunity that the current market pullback does present. And then we're going to touch on a couple of frequently asked questions that came up over the course of our client conversations. One on our strategy going forward, and the second on some events and some headlines that we're seeing around the bond market. Now, why don't we just jump right into things here? In terms of the current situation, what we are seeing, and what I think the most important word to key on here is de-escalation, right? The Trump administration and countries are all choosing, for the most part, to take the off-ramp from confrontation. We are seeing countries, including major trade partners, come to the United States in order to begin the process of negotiating new trade deals. And you're seeing the Trump administration start to deprioritize the communication from the tariff maximalist camp, headed by Peter Navarro, and really emphasize communication from the more moderate camp, headed by Scott Bessent, the U.S. Treasury Secretary. In addition, we've also seen a modification of U.S. tariff policy around certain types of imports, especially from China. So overall, what we are seeing is the emphasis on the more moderate voice within the Trump administration, some policy changes, as well as countries coming to the Trump administration to start the process of negotiating a deal. In the case of China, we did know that there was some back and forth escalation that happened. However, again, it looks like the situation, although slower, is also beginning to de-escalate. So I think that's a positive sign. And I think ultimately that's what's helping the markets to recover here. Now, of course, they have not fully recovered, but we have seen a significant move off the lows that we saw post-Liberation Day. Now, in terms of where this leaves us, I think really what this is that we are in the middle of an opportunity, right? This is a situation that was begun by rhetoric and is going to be ended by rhetoric in a lot of cases. Now, I realize that is a gross oversimplification. But at the end of the day, this is a situation that is created by statements and is going to be ended by statements. So the best thing that we can say is that this is an opportunity. And if you have cash that you've been wanting to get into the market and waiting for a pullback, well, I'm going to say here it is, right? In the words of the legendary trader Walter Deemer, when the time comes to buy, you're not going to want to do it, which is why I'm here today saying now is the time to do it. So if you have questions on that, happy to have a conversation. And again, I do want to emphasize, if you need, the cash you're sitting on is something that you need in 6 months or a year, please do not consider this to be a time where you want to put into equity markets. Like, we are looking for long-term money that you want to have invested over the long term, because again, things are not guaranteed. They could get worse again before they get better. All of these things are possible, and we don't want to try to predict the future, but we do want to try to prepare for it. So, in terms of the opportunity set that's in front of us, we also want to talk about looking at risk tolerance. We have had a couple of conversations with clients around adjusting the risk tolerance upwards. So if you do want to have a conversation about that, whether it's adjusting your risk tolerance upwards, now because of the opportunity, or once things have recovered, adjusting your risk tolerance down, then we certainly want to have that conversation. And will you please reach out if you want to have that sooner rather than later, but this is something that we want to, and we'll be touching in with each and every one of you on. Now, in terms of frequently asked questions, there were two ones that came up repeatedly over the course of the week. Now, one of them was on our strategy here going forward, and I think that you can pick up from my previous comments about opportunity is that we are seeing an enormous amount of fear, enormous amount of uncertainty. And frankly, we have been, although gradually and cautiously, we have been buyers of fear, just like we were sellers of greed in January, right? We have to remember back in January when we rebalanced accounts, the narrative was about a Trumpian golden age, and so again, we did raise some cash for opportunity at that point, and now we're in a very negative narrative, and so that we want to get that rebalance accounts and get cash to work like that. So I think that's important to note is that, again, we want to be living in alignment with the, with the statement of you want to be greedy when others are fearful and fearful when others are greedy. Now, in terms of the bond market, there are some questions, and I think I have to be, I don't want to characterize things too sharply, but, some very, very shrill headlines that we did see come out over the course of the last couple of weeks. You did have some pundits, talking about, a collapse of the financial plumbing and some very, very dire, very, very dire things. The bottom line is that, there was a very large trade on, by hedge funds where they were trying to front run certain aspects of the Trump agenda. Now, in addition to tariffs, we have to remember that one of the other key Trump administration agenda items is allowing banks to make more loans. And to allow banks to make more loans, it means you have to a certain degree, deregulate them. Now, part of that deregulation process, and again, the Trump administration was very transparent on this, which is why the trade went on, is that the administration is looking to allow U.S. banks or U.S.-based financial institutions to hold more treasuries without it affecting the way their capital ratios are calculated. Basically, what that means is that they can hold treasuries for free. Now, these hedge fund players obviously saw that as that these are very, very large banks. They would be able to buy an enormous volume of treasuries, and so they stepped in and bought lots in anticipation that the first thing the Trump administration would do would be to deregulate banks. Unfortunately, the Trump administration's first action was to deal with this tariff situation first, and that generated a risk event. And when you have a risk event, then compliance departments and risk management departments step in and tell their traders to start selling. And, of course, that's exactly what happened. So a lot of this volatility is going to come down to the fact is that some very, very large leveraged, speculators got caught out. They had the wrong trade on or the right trade at the wrong time. And it caused them to have to reverse their positions very, very quickly in order to satisfy their compliance and risk management departments. So contrary to some of the things that have been floating around the Twitter sphere or I've seen on business television, there is absolutely no indication that foreigners are dumping their treasuries, especially China. There's absolutely no indication of that. This really comes down to, and we've seen again confirmation from various sources, including explicit statements by the head of fixed income trading at JP Morgan, that this was large players unwinding large leverage positions. So again, that's something you would expect to happen in a period of volatility. So again, it's not pleasant, but nothing more, nothing less than normal market action. So with that, I'll wrap things up. If there's any questions you have, of course, please call. We thank you for your continued trust and confidence. And if you need to get a hold of us, please, book a time on our calendar through Calendly, call, email, and I think we did get the telegraph wires up and running here this week, so Morse code, and we're looking for any other possible suggestions here. So we'll be putting all those skills to work, and we'll look forward to hearing from each and every one of you, and hope that you continue to be well, and we'll talk to you all soon. Thank you.